Hey, Bubba Trades! Someone requested GDX, so I'm going to do an update on it. They said they were worried that GDX could be dead money. That's something we've seen from silver and silver mining stocks and a lot of the gold mining sector, and really up until this year from gold itself. That it had been dead money for a little bit. So that's never good, right? But in a diversified portfolio, sometimes it can be okay. The problem is a lot of gold bugs. They really don't like the stock market or diversification. They really just like their gold and silver. Anyway, that's called being a one ticker investor. And some people would even say that's called being in a cult. But anyway, looking at GDX and GDXY, no more need for dead money. It appears Yield Max has saved the gold bugs, and now they have a way to invest in GDX and not have to worry about dead money because they're going to be getting option premiums and covered call premiums from GDXY, which is going to be selling out of the money synthetic covered calls based on the implied volatility. I'm expecting this ETF to roughly over time yield about 30% in very low periods of implied volatility, maybe 25%, and high periods of implied volatility if we see GDX rallying up into the 40% for some months. So anyway, did Yield Max strike again? You know, I've shared my little Yield Max theory with you guys that Disney and Square Cash and PayPal, when you look at when those ETFs were dropped, from an Elliott wave theory perspective, they do appear to have been dropped near SuperCycle lows. And then Coinbase was the one where I was even actively showing you guys why I was investing in Coinbase and CONY and showing you guys the wave count that played out perfectly. And I said, isn't this so interesting? It looks like Coinbase is about to explode into a wave 3 of wave 3, and this ETF is dropping right before the quarterly rotation. Could that be, and Moderna, another similar story, but anyway, could that be the case again with GDX? I wonder. The Elliott wave is very interesting. I'm going to show you guys GDX. I think this is the 1-2 wave 3, highest high in the RSI, a shallow wave 4, and a wave 5 that ends with momentum divergence. So I believe from the daily, it's a pretty clean impulse, and it's looking like a short wave 2 is going to unfold. This is an A, B, C correction. So I've measured the fibs. Now the daily chart, the widest invalidation is 28.91. That's a small degree wave 2 low. We kind of get a Goldilocks level for this daily invalidation. The 61.8% retracement of 30.18 lines up with a small degree wave 1 high of 30.48. Now that's a little tight for this, you know, in my opinion, a very important sector. I'm planning to invest in GDXY. Right now, what I'm doing is I am investing in uncapped plays on gold and silver. Specifically, I've been buying OUNZ, and I have a position in Pan American Silver. I had a leap position. I still have a leap position in New Gold Corp NGD. So I'm investing in uncapped gold and silver plays right now, including physical silver that's actually physical in my possession. But I am definitely planning, in my opinion, unless there's something really off with the back testing, this ETF just happens to not do what its objective is. I am planning on investing in this ETF. I think I'm going to even be investing in this ETF pretty soon, but definitely in the third quarter. I think that for me, this is a really cool kind of backbone and cornerstone, or it's just maybe another awesome piece in the portfolio where we're seeing covered call ETFs and put selling ETFs just come out of nowhere. And some of these fund managers have gotten very creative and diversified. KWeb and Clip, KLIP for Chinese internet. We see EMCC and IEMG could be blended together for emerging markets. So now we have, you know, in the S&P 500 and the NASDAQ, there's tons and tons. All of the crypto derivative plays now, many of them have huge dividend paying things. Anyway, GDX, all the companies that mine gold across the world, the largest ones. I mean, how much really zero risk? What's the risk that this goes to zero? You know, it's always kind of been very close to none, which has been the kind of the real reason that people, try to be gravitated towards this, and really just the reason people have, fundamentally hard assets, backed holdings in their portfolio. It's certainly something that I do. So GDX and GDXY, I think that the reward potential is there, but what's the risk potential? It's very interesting that this could be grown, seemingly indefinitely. I wanted to have a growing gold position in my portfolio anyway. Now I have a way to get possibly a 25 or 35% yield from this, and I can blend this ETF with my favorite gold and precious metal holdings, and I can grow that precious metal bucket forever. And so then I don't really care about US dollar debasement. That's a pretty big deal. And for the first time in history, there's a way to get a 25 or 30% yield from gold. That's pretty cool. I think YieldMax also, they gave a cherry on top. They didn't just give us cake. They gave us a wedding cake almost. They really decorated this, because this ETF is dropping at a very interesting time. 30.18 to 30.48. That's the kind of Goldilocks level. 28.91 is a little wide. But I think this is 1, 2, 3, highest high on the RSI, shallow wave 4, 5 waves up from this low. So this is 5, 3, 5. Elliott wave theorists are looking for the length of wave 1, place at the wave 2 low to be reached. So if the length of wave 1, place at the wave 2 low, was hit, we would see GDX go up to 44.75. I'm looking for it to hold above 30.18 to 30.48 for now, but that would be the daily target. It would go up to 44 if this is a short wave 2 before a shallow wave 4 and a wave 5 higher. So looking at some of these other charts, would that really be it? This, even then, with a 30% yield, a 35% yield, that would still probably make a winner that pays itself back over time. But looking at gold and silver, this looks like it's more than that. It looks like this is a way to lock in a 25 to 35% yield on gold and silver at, yes, the infamous grand SuperCycle commodities low. This is a wave 1, wave A for gold, and an ABC wave 2 at the bottom of this pitchfork. I believe one day, based on Elliott wave theory, GLD is going to the median of this Andrews pitchfork on the long-term cycles. Yes, that is technically voodoo. But I believe that from this low, this is a wave 1 and a wave 2, and a large wave 3 is in progress. This is 1, 2, 3, 4, 5 waves up from this low, and we're ending wave 4 between the 23.6 to 38.2% fib. So I'm looking for 203 to 196 to hold, but really, I want gold and silver in my portfolio anyway. So I'm personally not going to be selling OUNZ, and I'm going to be continuing to buy dips, and we'll see if gold and silver go down, if that correlates with the market going down too. But I am going to continue to invest in gold and silver, even if GLD go below 203 to 196. I'll talk about why with some of these large accounts. I think that it's something I want in my portfolio anyway, but I don't think it's going to really come to that. Just to be honest, I think 196 to 203 is going to hold, and this is 1, 2, 3, 4, 5 waves up. We're going to start seeing GLD head towards the median of this pitchfork. One day, we could see 1, 2, 3, 4, 5 waves up, take GLD all the way to 287. In some of the individual counts for the gold mining stocks, there's an awful lot of catch-up for them to be playing to gold and silver. And the Elliott wave counts, they also hint that in the long term, we could see some of these gold price targets and silver price targets get even more aggressive. So I know that's all based on Elliott wave theory, but I think that YieldMax has dropped this ETF at a very interesting time. I've talked about RGLD recently. I think this is 1, 2, 3, 4, 5 waves from this low. Wave 1, wave 2, between the 61.8 to 78.6% fib. And then from this low, you can see 1, 2, 3, 4, 5. I think that's wave 1 and wave 2. I'm looking for 113.54 to hold. 107.83 is a little wide, and a wave three to begin before a shallow wave four and a wave five higher. I can expect RGLD to be up in the 160s one day, and then eventually even up into the 200s, the low 200s for RGLD. So I would suspect that GDXY, would have already paid for itself by then, if that type of long-term cycle played out. Newmont Gold, another interesting one. I mean, this is kind of a glaring one, looking at the long-term cycles, and why I think that the reason people are scared to not invest in gold and silver, I personally believe, for me, it's merited. You know, that's how I see it, and so now this ETF is allowing me to invest and really profit from what would be a scary situation, and I can quote unquote guarantee that it's not going to be dead money. I'm going to be getting covered call premiums against this ETF that has, in my opinion, very strong fundamental, can it go to zero risk? I would say the answer to that question, in my opinion, is no. So I think this is a 1-2 wave 3, wave 4, and wave 5 higher. Again, very clean on the RSI. 1-2 highest high within wave 3, shallow wave 4, and a wave 5 that ends with momentum divergence. And an A, B, C correction, getting oh so close to invalidating, but no cigar. 29.42, just too close for comfort. But this is the market algorithms at work. Wave 1, wave 2, they're pre-programmed, and I think that's a wave 2 low that's going to hold forever. And we can see this is just a very interesting one. Newmont Gold could be heading up into the 80s, and this is one where we think about looking at gold, and yeah, maybe gold's just going to be in the 280s or the 250s at this time. But there's also the chance that gold could be really extending into a long-term wave 3 of wave 3, and that we're going to see gold is going to actually be keeping pace with some of these gold mining stocks. So that's Newmont Gold and Agnico Eagle Mines, very similar on the long term. Getting started in this base, and I've talked about another long-term cycle, wave 1 and wave 2. Yes, another wave 1 and another wave 2. I connect the beginning of this Andrews pitchfork with this high and this low in the long term. Look at these perfect reactions on the bottom of this pitchfork. It looks like it's heading towards the median, and it's going to head towards the lower bound of this pitchfork. I know that's kind of, it's technically based on physics, and but let's be honest, this is Elliott wave voodoo. At work, and these long-term cycles, it's just kind of, we've seen Agnico Eagle Mines start heading up towards this wave 1 high, even getting up towards the 90s and into the hundreds. Would be quite the interesting feat, but I suspect one day we're going to see AEM go all the way to the lower bound of this pitchfork, possibly to the median of this pitchfork, some of the targets for this base, if that would happen. Just in the very, very, very long term, hopefully, Agnico Eagle Mines could be in the 150s. So the consequences for, and that's assuming the market goes up with gold. If it doesn't, it's even more pronounced that this is the diversification piece. But in the long term, on its own, it's very scary for people who have their assets denominated in fiat, people who hold a large savings that's mostly in fiat, to see the possibility that Agnico Eagle Mines, Newmont Gold, other GDX holdings could be going up 100%, 150%. I've talked about how silver could be going up itself. Spot silver could finally, it's broken above this wave 1 high, and where could it be heading? In my opinion, silver is going to be in the 30s and even the 40s, not too long from now. And then one day it's going to be in the 50s, and who knows if it's going to be above this high. Looking at some of these other gold mining stocks, looking at First Majestic Silver, and I talked about, and I own Pan American Silver. This could be a very interesting time for GDX to be requested on this account. So I think it's a great call out, and it's a very interesting time to be blessed to buy Yield Max. So happy Juneteenth, everybody.